The Indian Rupee recovered from Friday's fresh record week level boosted by market intervention by the Reserve Bank of India on Monday. Still, volatility expectations climbed to a multi-month high despite the pullback. On Friday, the rupee did not just weaken, but it collapsed in a 30-minute whirlwind trading. That triggered stop losses and left traders stunned. The losses accelerated after policymakers surprised traders by choosing not to prop it up late last week. The Indian currency fell nearly 1% to about $89.49 per dollar, with the move quickening after breaching the 89 mark. Many dealers and importers had assumed the RBI would protect the 88.80 level, as it had been doing for months. But the central bank's absence led to the panic trading on Friday. Referring to Friday's move, Dilip Parmar, a foreign exchange analyst at HDFC Securities, said, and I quote, "There was real panic in the market. People had been expecting that the RBI would protect the 89 level, but this time it was missing." On Monday, the currency recovered to trade at just above 89 versus the dollar, up 0.3%. Traders say that the central bank intervened to support the rupee, helping the currency peel away from the historical low. Foreign portfolio outflows, lingering uncertainty over a US-India trade deal, and a pullback in the central bank's defense of the 88.80 level had sparked a slide in the currency. The slump came just a day after RBI Governor Sanjay Malhotra said that pressure on the rupee would ease once the country clinches a good trade deal with the US. Mr. Amit Pabari is the founder and MD of CR Forex, is now joining us live from Mumbai. Welcome to the broadcast. Why did the rupee spike on Friday?
You know, whenever an asset class moves, there can be two reasons. One can be a fundamental news-based reason, or second can be a demand-supply mismatch. If we see any other asset classes or any other currency move between Thursday or Friday, for example, whether dollar index moved higher or any other Asian currencies have got weaker, the answer was clear-cut no. So why did rupee move higher on Friday? It was basically because of demand-supply mismatch. We have heard from dealers that a private bank was on the bid side and RBI, which was protecting dollar-rupee pair from a quite long time and was providing supply, was missing on Friday. Resultant, rupee moved above 89 kind of a level, and a short squeeze happened, and stop losses of a lot of traders happened, and a panic move beyond 89, move towards 89.50 level happened on Friday. So because it was more of a demand-supply mismatch rather than a particular news.
Mr. Pabari, what next for the rupee? Because that's a major concern right now.
You know, we have seen historically that whenever rupee breaks a particular kind of a level, then it tries to consolidate in a different range. So for example, earlier the range was between 81 and 83. Then the range moved from 83 to 85, then 86 to 88. So probably now we can say that the pair will consolidate between 88.80 on the lower side. 88.80 will act as a strong support for the pair, and 90.20 will act as a strong resistance for the pair. So we are expecting the pair to trade in a range between 88.80 on the lower side and 90.20 on the higher side. A trend reversal will only occur if the pair is trading below 88.80 kind of levels.
Mr. Pabari, what is your take on the RBI's absence on Friday and the reversal in position on Monday?
You know, any central bank, whether it is RBI or any other central bank, their main focus should be to reduce the volatility. They should not protect any particular kind of a level. So when RBI have not intervened on a Friday, it was very obvious that it should not protect a particular level. They did a right job by allowing rupee to move as per the demand and supply mechanism, And on Monday morning, a lot of dealers have been suggesting that RBI might have intervened in the NDF market near 89, 40, 45 kind of a level and allow rupee to move back to 89.10 kind of a level. So my take is that RBI is doing a fantastic job in managing the volatility from a point to point basis, not on a particular day basis. And they are very smart, they're very active, they know what tools to use when to protect the volatility. So they are doing a great job basically.
Mr. Amit Pabari, it's good to see you. Thank you very much for your time and for talking to us. We'll have to leave it there.